Welcome back. You're still tuned into Business Lunch, and let's now put the spotlight on the IT space. Industry body Nasscom says that 2022 was a year of steady growth of 11.4% in constant currency terms. They're saying that the domestic market witnessed strong growth, but travel and utilities haven't picked up quite as much as expected. Nasscom further also estimates that the Indian tech industry will grow to $245 billion US. This is for FY23. So from the sidelines of the Nasscom Tech Forum, Rima spoke with Ashwin Yardi, who's CEO of Capgemini, and began by asking him about the mood at the global headquarters as clients are getting a little bit more conservative. So let's listen in to that conversation.
For Capgemini, 2022 was the best year we've had. Almost 22 billion euros in revenue. That was a 16.5% growth. At constant currency, one of the highest, following 8 quarters of double-digit growth. If you look at our bookings, again a very strong number, and we delivered a very strong cash and profitability numbers. So in some way, the mood's actually very positive at the headquarters. We ended the year with a very strong momentum on bookings. At the same time, what we do see is there is some conservatism in the market. And that's how, we've sort of given a reasonable guidance looking at how we see Q1, Q2. So we've given a guidance of 4 to 7%. But we're reasonably bullish on the market, especially coming out of how we closed the year and what we have done in the market over the last 2 to 3 years in terms of our strategy, in terms of our focus on clients. I think the mood actually is quite optimistic and positive for 2023.
But if the mood is optimistic, can you explain your guidance for next year? If you have done 16.6% constant currency revenue growth last year, 4 to 7% growth doesn't appear to be reasonable. It appears to be subdued to the person sitting outside. Can you explain that? And also, what exactly do you mean when you say the clients are conservative?
So I would say 2 things. First, the reason, as I said again, is we do see there is a softness, and based on the industry, again, there are certain clients who are more actively or acutely impacted by the macroeconomics, and they are looking at how they would save costs, or they're revisiting some of their investments in technology. And a lot of people are uncertain. A lot of our clients are trying to gauge their industry, gauge the impact of all the macroeconomics, geopolitical situation. And hence they are cautious, and hence they also in wait and watch, and that's the sort of rationale behind the guidance. Is we just want to be sure clients would spend all the money which they have agreed to spend with us. Okay, there's nothing which says they won't, but we want to be sure and see how the quarter or how the H1 pans out. So that's the
So
context.
On a blended basis, what are the tech budgets looking like right now? What is it that they've committed to you?
We won't share, the budgets committed to us are in our guidance, so one, they're reflected in our bookings, which is, we always report a certain period of bookings. We don't report the bookings for, more than 12 months. So we report it in a certain way. And then what the guidance is, the growth over 2022 base, which was a big base. Yes. We see growth of 4 to 7%, and that's based on our, firm commitments we have.